Hey everyone, welcome back to Corporate Decoder, the place where we read through boring corporate filings so you don't have to. Today we're diving into a report that involves a fired accountant, potential weaknesses, and other twists and turns. It's like a reality TV show but with more numbers and fewer dramatic arguments. Today we're looking at an 8K filing from Ispire Technology. An 8K is basically a company's way of saying, hey, something important happened and we need to tell everyone right now. Scroll date of report, date of earliest event reported, span ID equals sign XDX underscore 90 A underscore ED D document period end date underscore C 2025021 underscore say Z5B 1R4 JPW5B DAL non-numeric context ref equals sign as of 2025-02-18 format equal ed equals sign fact 00000 name equal di document period end date February 18th 2025 sec non-numeric sect span sect scroll. This particular 8K is dated February 18th 2025, so these events are relatively recent. The main event, a change in their accounting firm. This falls under item 4.01 inches of the filing, which deals with changes in the company's certifying accountant, the people who check the company's financial statements. The audit committee, which is a part of the company's board of directors, made the call. They decided to fire CBIZ CPAs, who are the independent registered public accounting firm, meaning they were supposed to be impartial when looking at Ispire's numbers. CBIZ CPAs is out effective immediately. The scroll as approved the appointment of Marker Major CPAs LLP Marker Major, that scroll. And they've hired a new firm, Marker Major CPAs LLP, to take over for the fiscal year ending in June 2025. So Marker Major is now in charge of making sure Ispire's financial statements are accurate. This scroll. As of the date of dismissal, CBIZ CPAs had not provided a report regarding the company's financial statements. This scroll. Here's a key point. CBIZ CPAs didn't actually issue an opinion on Ispire's financial statements before getting the boot. They didn't sign off on anything, which is notable. Now, the report goes on to say that during the short time CBIZ CPAs was around from December 2024 to February 2025, there were no major disagreements about accounting, financial reporting, or auditing procedures. Scroll, except that there were material weaknesses in the company's internal control over financial reporting. This scroll. However, there's an exception. The company itself had previously reported material weaknesses, which mean significant problems in its internal controls related to financial reporting. Think of internal controls as the system a company has in place to make sure its financial information is correct and reliable. Material weaknesses mean that there's a good chance mistakes could slip through. Scroll assets acquired from a controlling stockholder in accordance with GAAP is scroll. One issue was the lack of controls to enable the company to record assets acquired from a controlling stockholder in accordance with GAAP. GAAP, by the way, stands for Generally Accepted Accounting Principles. It's the standard set of rules that companies follow when preparing their financial statements. This means they had problems recording assets they got from someone with a lot of power in the company. It's not good when you can't properly account for what you own. Another weakness was the lack of controls to enable the company to evaluate significant estimates. Businesses often have to estimate things. For example, they need to guess how much of their inventory might become obsolete or how many customers might not pay their bills. The report specifically mentions problems with estimating inventory reserves for slow-moving items. Scroll, the lack of comprehensive accounting policies and procedures manual in accordance with US GAAP 6. Scroll, they also didn't have a complete accounting policies and procedures manual. This is like the instruction manual for how the company handles its finances. Without one, things can get messy and it's harder to make sure everyone's following the rules. Scroll, a sufficient complement of personnel with appropriate technical expertise to evaluate complex accounting matters. 6. Scroll. Finally, the company admitted to not having enough people with the right accounting skills to deal with complicated financial issues. Basically, they were short-staffed in their accounting department. 6. Scroll, the company did not consult with Markham Asia regarding the application of accounting principles. 6. Scroll. The report also says that Ispire didn't talk to the new accounting firm Markham Asia about any specific accounting issues before hiring them. So, Markham Asia didn't give them any advice that influenced their decision-making. Six Scroll requested that CBIZ CPAs furnish the company with a letter addressed to the SEC. Six Scroll. Ispire gave a copy of this 8K report to CBIZ's CPAs, the fired accounting firm, and asked them to write a letter to the SEC. TSC Scroll stating whether it agrees with the above statement, and if it does not agree, the respects in which it does not agree. 6 Scroll. In this letter, CBIZ's CPAs would confirm whether or not they agreed with what Ispire said in the 8K, especially concerning the lack of disagreements and the reasons for their dismissal. That letter from CBIEZ CPAs, dated February 21st, 2025, is included as an exhibit to the 8K. You can read it to see if they had any issues with Ispire's version of events. So what does all this mean? Well, a change in auditors, especially when the previous one didn't sign off on the financials, can sometimes raise red flags. The stated material weaknesses in internal controls are also concerning. It suggests the company needs to improve how it manages its finances and make sure its numbers are accurate. Now let's put on our analysis hats. Ispire is navigating some potentially choppy waters. The change in auditors and the admission of internal control weaknesses aren't exactly confidence boosters for investors. On the one hand, bringing in a new accounting firm could be a good thing. Markham Asia might be able to help Ispire strengthen its financial reporting and get its house in order. Addressing the internal control weaknesses is also a step in the right direction. If they fix these problems, it could make the company more reliable and transparent. However, the material weaknesses are a real concern. They suggest that Ispire's financial statements might not be as accurate as they should be, and that's a risk for anyone investing in the company. It also raises questions about management oversight. Were they aware of these problems, and if so, why weren't they addressed sooner? As for the stock price outlook, it's tough to say for sure. This news could cause some short-term volatility as investors digest the information. Based on a quick look at the industry, I would say that Ispire might be slightly overvalued or, in the best case, fairly valued. I think a price of $5 to $7 is a fair valuation, and right now I'd lean towards a neutral to slightly bearish outlook, meaning I'm cautiously watching the stock. I think the company has potential, but they need to clean up their act first. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, hit that subscribe button for more insights into the world of corporate filings.